So let's get straight to Vedanta then. The Vedanta Aluminium in particular reported a good set of numbers. To take us through what went on in the past, quarter, post the demerger, these companies are reporting their numbers. To discuss that, what's the way ahead? Mr. Ajay Goel, the Chief Financial Officer at Vedanta, joins in. Hi, Mr. Goel. Thanks a lot for joining in. Well, let's focus on the aluminium piece first. What's the outlook on pricing? And also, if you could give us a sense about EBITDA per ton. Well, it's scaled up close to $1,700-$1,800 per ton. What's the outlook?
Aluminium, the demand remains very robust and it is structural. In that case, we do see that the current LME prices holding at least in the midterm at about $3.5 to $3.7 thousand per ton. Now, margin you're right now at about 1.7 thousand per ton. With the prices holding, but in Vedanta's case, our cost will go down structurally as our refinery in Lanjingat ramps up. So our margin over the next 1 to 1.5 years will remain within $1.7 thousand to almost $2,000. Vedanta has an advantage of local manufacturing, local sale, and as we integrate our manufacturing, our margins only go up through cost compression.
Got it. That's going to be quite ambitious, if you believe that aluminium prices will hold at around $3,500, but on the EBITDA per ton, we'll hold it to that number, $1,700 to around $2,000 per ton. Now, Vedanta has been a dividend dream, right, for shareholders. But what's the dividend policy going ahead, particularly for Vedanta Aluminium, since Balco is where all the cash is sitting?
You're right, Vedanta as a group, even pre-demerger has been the India's largest stock in terms of dividend, with almost 13 to 14% dividend yield. Now, post-demerger, all the 5 companies board has also taken a different dividend policy. Now, all these 5 companies are cut from the same cloth. So they will be similar, they may not be same for sure. Now, if I come back to aluminium specifically, their policy, in fact, is quite descriptive, not prescriptive. And in that case, board will decide how much is the dividend quantum. Having said that, if you look at between Vedanta Aluminium and the Balco, the split, in fact, is higher in terms of Vedanta Aluminium. If you look at Q1 profitability, it is almost 1 billion plus EBITDA. And in aluminium combined business in the current fiscal, EBITDA will be more than 4 billion. So across Balco and Vedanta Aluminium, we will have sufficient profit to fund our growth in aluminium, at the same time rewarding shareholders through handsome dividend.
Mr. Goel, what's the hedging policy of the aluminium business? If you could put a few numbers to it.
Yes, in fact, our hedging policy is quite tactical and also opportunistic. At the same time, we also look at what is a midterm view. As we speak, almost 25% volume for the remainder of the year is hedged, and the hedging value is almost $3,100 per ton. So even if the pricing has to go down, we are broadly covered. Broadly across the portfolio, aluminum for sure, 25% we intend to hedge, and the balance we also want to capture the spot prices.
Okay, we've got that out of the way then in terms of the cost per ton, the EBITDA per ton, as well as your hedging policy. Let's turn our attention then to the oil and gas space. You'll admit as well, over the last many years, the ramp up has been a little bit subpar, but now you're seeming optimistic about the guidance. Put a couple of numbers to it. What is the current production levels and where do you see it headed?
No, indeed, in the recent past, you're right, the volumes in case of oil and gas business has been below our commitment, and the entire augmentation of volume has been lower despite our efforts. The world over, whenever the oil fields age, volume in fact goes down. We closed the last quarter with a run rate of almost 80 kboe/d, so 80 kilo barrels of oil on every single day basis. Our outlook will be going up, and we intend to close the year at about 100 kboe/d as we close the year. Many efforts in terms of more drilling of the pipes are underway. At the same time, ASP injection across the field is one more area. We're very, very hopeful we'll be closing the year at about 100 kboe/d by March end.
Okay, 80,000 to around 100,000. We'll keep an eye out on that because oil and gas ramp up has been a little bit slower. But let's turn our attention to the steel business. You have a big ramp up plan there in terms of capacity towards 15 million tons. Could you run us through that piece? And also, is there some temptation to sell it at current EV? It looks fairly attractive. So if you get a good buyer, will you look to sell it?
The entire growth will be in fact organic. If you look at electricity as a business, in terms of our back-end paraphernalia, be it land, be it access to the raw materials, both coal and iron ore. At the same time, the entire STP operations This plant can easily go to almost 15 MTPA in fullness of time. So we intend to invest in Eco Steel from current 3 MTPA to 5 and to eventually 15 MTPA. We do believe that business also have significant potential in terms of meeting India's growing demand for the steel, and it will be also adding lots of EBITDA and profitability for the Vedanta as a group as a whole.
Let's squeeze in a couple of more points and let's turn our attention to the power business. I know there was that unfortunate incident at Athena Power Plant, but the street would want to understand what's the outlook now with regard to this plant. When does it restart? Are the damages insured?
Yes, the event in fact was quite unfortunate, and it is mostly behind us. We expect the plant to restart sometimes in early Q3, October, November. That in terms of profitability remains a small portion of overall Vedanta as a group. Once the plant start, the profitability of entire power business, our capacity on merchant power is roughly 5 gigawatt, and from 5 to 7 to 8 gigawatt is our outlook. The entire Athena power plant is a fully insured. So in terms of one-time loss on plant and equipment, in fact, is minimal. And also the impact on profitability remains very, very small for us.
Okay, so you told us about the business aspects of various entities, but let's focus on the promoter entity. What is Mr. Agarwal's plan? At some time there has been some supply that's come into the market. So what is the targeted promoter holding in all these listed entities? The street would like to know, will he pay some stake?
In the current year, we gave guidance around the volume and the cost. And if one has to also model, looking at the current prices, Vedanta is looking at almost 10 billion EBITDA on a yearly basis. And that also lead to 5 billion free cash flows. The 5 billion cash flows is sufficient to fund our growth ambition, at the same time deleveraging the balance sheet. So any strategic stake dilution will be in the interest of the shareholders in terms of value creation. We need not dilute stake for deleveraging. We did dilute 1.7% in Vedanta Limited to fast track the deleveraging. No more stake sale is in discussion with Vedanta.
Final question, Mr. Goel, before we let you go. We have demerged entities, many listed entities now, but you all seem to be wanting one more out there. You all have announced a demerger of Vedanta real estate arm. Give us some details. What is the valuation? When does this entity list on the bourses?
Valuation we will let the market decide. Today, the Vedanta board approved that our multiple asset on real estate, it's more than 2,000 acres, we demerge. And with that, the entire process through NCLT takes almost 9 to 12 months. So we expect almost same time next year, it will be listed.
So we'll have another listed entity, Vedanta Real Estate Arm, the demerger that was announced yesterday, in the next 12 months or so. Always a pleasure speaking to you, Mr. Goel. Thanks a lot for giving us a sneak peek into all of the businesses, and in fact, the most valuable one, at least by market capitalization as of now, which is the aluminium business. Well, let's get Mitesh back on the show.